All right, all right. Let's get this pony show on the road. How do I switch this over? Okay. Should be looking at charts. Hi, I'm Kbrot, and yeah, I'll talk about the title to this later because I'm sure I and everybody else here hates when people wax on for too long before the video starts and all the interesting stuff begins. So let's dig into the charts and I'll explain why the title of this is 51% attack at the end. I don't have a script for this, so I'm kind of just doing one of my market updates posts, but I guess like mentally off the cuff and just kind of going with it. Um, I can see the live chat, so if you guys have any questions or you want me to like focus on something, more than happy to check it out. But yeah, I'm pretty much just going through the charts. I'm drinking my liquid courage so I can go through with this live stream. It's if YouTube asks, it is apple juice. Um, okay, so let's get started. This is again, like I said, off the cuff. Just how do I look at charts and how do I look ahead to what may or may not be coming? You know, we don't make predictions. I've never made predictions. I just like to read the charts and see what's most likely. I like to look at all the probabilities. So here you can hopefully see my trading view. Let me see how that looks on the tubes. I will have to fix the aspect ratio for a subsequent stream. For now, I'll just tell you what we're currently looking at. Actually, you know what? First, let's start really quick with the calendar for the week, which is normally kind of at the end of my posts. But I think it's important to sort of get the the context for the coming week, because here's the thing. I think this week is going to determine pretty much the next year of markets for both assets, equities, commodities, crypto, all that kind of thing. And what I mean by that is I can't tell you if this week is the bottom. I can't tell you if this week is the reversal. I can't tell you nothing. Nobody and nothing and nobody can tell you that. What I do think is that this week will give us an answer, whether you're still bullish, still bearish, or whatever. This week is going to give us an answer, and I'll explain why with some of this upcoming stuff we're about to run through. So first up, the calendar. This is a huge week. I mean, huge, huge, huge. There's a reason why I said what I just said. First, let's take a look at the economic calendar. Make sure that's, again, showing up on the stream well enough. Yeah, okay, so you can see it there. So, yeah, here we've got, you've all been reading about it. Here are the actual dates. Here's the Fed talking this week. And, Papa Powell, he's going to be hitting us up with some information. And, they've been in radio blackout, radio silence for the past week because Fed governors aren't allowed to talk leading up into these rate increase meetings. Here, you can see when they are. It's going to be Wednesday. It's going to be a big day. Coming up, this is, again, we're on New York time. So you can see 2 p.m. New York time. So what we always talk about, 2 p.m. New York time is when the Fed's going to come out with their rate decisions, projections, and then a little bit after is when Papa Powell is going to come out and talk. So, again, rate decisions, the market's pricing in 50 BPS, 75. I've made my views on this known before where, for the sake of the planet, the economy, I think we need to fight inflation and go up in rates. But as far as it pertains to, what it's going to do to prices, we don't know. We just don't know yet. I saw people commenting today, in the day and yesterday's daily, where they're saying, the higher the rate hike, suggesting the healthier the move by the Fed that could, see a jump in equities because the market is somehow happy with that result. I don't know quite how it's going to play out, but what I just want to tell you is that there's going to be volatility. That's all I want to talk about here is expect crazy volatility. 2 p.m. on Wednesday, New York time, so that you guys are aware of it. And Wednesday is also special because it just so happens to be VIX expiry. We'll look at that chart in just a second, but VIX is, of course, the volatility, the index that tracks volatility throughout the S&P 500. It's a big one, and so VIX options do expire on Wednesday as well, just to add to the fun. And lastly, again, I hope this shows up at the right size. Yep. People who've sort of read my posts before and others should recognize this calendar. This is where I get it from. It's from from the official exchange. Yes, this Friday is of course an options expiry, as all Fridays are, but it's a special one. It's the third Friday of the month, which again, for folks who are in the know what that means. For those who don't, the third expiry of the month is when the majority of indices and stock trades, stock futures, sorry, their options close. And it's the third Friday of June. What's special about that? June is the end of the quarter. Dun dun dun. Quad witching. That's right. On this beautiful Fed week, dump week, VIX expiration week, we also get a quad witching expiry. So on Friday, you've got individual stock options expiring, you've got indice options expiring, you've got stock futures expiring, and you've got indice futures expiring. It's a lot. And so yeah, that's just to say a lot of events this week, a lot of volatility. As far as today and tomorrow, Monday and Tuesday, what's going to happen leading into this kind of volatility, who's to say? I could see it being completely flat, people just kind of waiting on their heels to see what Wednesday brings, what Friday brings. It could also just be that today and tomorrow are just completely insane as well. It's not fun. I'm not here to say that this is a good time in the markets, but for people who watch markets for trends, for the numbers, for the patterns, it's a busy fucking week, right? So all right, let's get out of the boring calendars. Let's go to the more fun stuff. I'm gonna take a sip as we switch to, what was that? Did I have a recipe up? Oh no, it was a how-to tutorial. Okay, and I did not mute my phone. Sorry about that. All right, so here we are on the charts. Again, I'm just gonna take a quick peek to make sure it's showing up in the middle of your screens. Close enough, I guess. You guys can comment if I need to fix things for a subsequent broadcast. I'll try to keep it in the middle of the screen as best I can. It looks like it is showing up correctly. I don't have my setup perfected. All right, so let's start from this. Actually, let's start with crypto, because crypto is what we're here for. This is ETH finance, and which is of course very correlated with Bitcoin finance, Grandpa finance. And so here we're taking a look at something I wasn't planning. I had a post that I was going to write about, and it was about a bottom indicator that I think could have merit. We're gonna follow it together. It's not a guarantee. I hadn't planned on making that post for at least another week, possibly 2 weeks, because as of Friday, when I was thinking about doing this, the lines were. The indicator was still a week and a half off from firing off. It is currently, and I'm going to be really bad with my word choice in this stream, but you guys all understand me by now. This is not financial advice. I make no promises, anything like that. Currently, the indicator is in the process of firing as we speak. So let's talk about what it is. Why am I offering this up? This is my blood on the rock, where I could be really, really wrong and be laughed at for eternity. I kind of don't care, because either it's right and we all get a little leg up on the market, or it's wrong and we're never going to talk about this again. But look, it's a trend. It's happened twice on a very, very large macro scale. Potentially 3 times, and I'll explain that in a second. 3 times is not a pattern. It's still in the realm of coincidence, but let's take a look at it. Okay. So let's go back to the 2018 bottom. Again, real quick as I zoom in. Sorry, I'm just gonna take a quick peek at the stream to make sure it's in the center. Otherwise, this is gonna be all for naught. Okay, looks like you guys are seeing it. So here we go. We're on the Bitcoin index chart, which only does daily closes, and so it's a little bit more power. It also reaches farther back in Bitcoin's history. And if you look here, Bitcoin's bottom, which was the week of December 10th, 2 very specific things happened that do not occur at any other point on the chart in simultaneous fashion, which is when I picked this out of the chart, months ago. I wanted to see if it had any merit. So first of all, we've got these MAs, these moving averages. Again, we're on the weekly. This is the Bitcoin index. You got these here. This is the 20 week, the green line. 20 week dropping below the, the 100 week. Right here, green below red, 20 below the 100. Okay, that's just one thing. But that's happened. That can happen at other times. It can happen on other scales. But it also coincided with something else, which is, and this isn't magic. It's not anything crazy. But if you look here at the bottom of the screen, let me make sure this is showing up. Crap. Can you guys see the RSI? I'm so bad at this. You can, it looks like. I think it's showing up. Okay. The RSI here. Drop below into the oversold territory. Specifically on that week of the bottom, 28.8, which does count as oversold. So specifically, these two factors occurred simultaneously. Or, sorry, I should say the RSI happened just after the cross. Okay. One example. And I said, that's interesting, because I looked through the rest of the chart. And again, these things can happen. Actually, Bitcoin doesn't really go oversold on the RSI. So nix that. But certainly when green goes below red or causes other death crosses, it doesn't also occur with the weekly RSI going oversold. So first example, again, we've got 20 below the 100 on the weekly and the RSI oversold. Let's take a quick peek at the 2014 bottom. Lots of spooky little it's moving all over. Okay, lots of spooky crosses over here too, but certainly on the smaller time frames. But when we look at the weekly and where the bottom of the market was, and I'm gonna asterisk this statement so that I can come back to it later. The market bottom, week of January 12th, 2015, and yes, I will say that because on a closing basis, it was the market bottom. Obviously, Bitcoin dawdled around, kind of got rejected over here in July of that year, and reversed back down to set a kind of a, I guess as we say, a scam wick over here in August of that year. But on a closing basis, I'd consider this the bottom. And frankly, let's be honest, guys, if you saw a pattern like this play out and you got to buy in here, and then what happened next happened, Bitcoin's Bitcoin and Ethereum, since this is Ethereum finance, their bull run happened afterwards, you'd be pretty damn happy. So for the purposes of this, calling this the bottom, because once again, here, week of January 12th, what do we notice? We've got the 20 below the 100 up here. And what else happened? RSI oversold, 28.1, 28.2. Coincided with each other. The RSI happened just after the moving average cross. And yeah, for people who are really squinting at this and saying, it looks like it happened, looks like the RSI happened before, take a look. If you're looking here at the bottom on RSI, 30.7. It's close. No cigar. And even in the weeks leading up to that bottom, let's say December of 2014, 31.9, 32.4, 30.46. Not oversold yet. It took until after this cross and this RSI. And so, people using logic can easily say, well, one thing leads to another. Obviously, and I'll agree with you, moving averages are lagging indicators. So the market was already moving down. The market was already telling us that the pattern, the trades, the price action was going down. It's only natural that the RSI would go into oversold. You know what? I don't have an argument against that, because, it's true. But this is what's printed on the chart. And if I'm doing silly things like looking for patterns like this, look, it doesn't happen anywhere else. You got to take that into account. Even though it follows the logic, and I 100% agree with that logic, it happened. It printed, it happened, and it did not happen anywhere else. Except for these instances, of course, that I'm talking about. And then lastly, this is kind of what I was talking about earlier, where the index doesn't reach back far enough because Bitcoin didn't exist for long enough. But you can kind of see in the 2011 bottom, which was, I believe, in November. Yeah, okay. November bottom. This one's a little bit iffy. You're going to have to use your imaginations. It's not set in stone. But take into account Bitcoin's very, very short history at that point in time. So you've got a bottom of November 14th. And you can kind of draw a line here? I think I can. You can kind of draw a line from that. Oh gosh, that is ugly. You know what? This is not going to work. I need to practice that for next time. So we're going back to using our imaginations, boys and girls. Anyway, you can see where where the 200 started to form in June of 2012, when Bitcoin was in fact 100 weeks old. It had, or sorry, more than that, but once that moving average had developed, you can kind of see this red line. Imagine it just going back here. You can kind of follow my cursor. Oh, look at that. Would have been right around there. And had the price action been just a little bit more negative. And again, there just wasn't enough liquidity, not enough volatility. Sorry, volatility is the wrong. Of course, there's volatility. Did not have the liquidity to push moving averages that quickly because there just wasn't enough capital in it. You can kind of imagine with this red line extended out, if this green, the 20-week average, just dropped a little bit faster on better liquidity. I don't know. I'm not gonna stake my name on this, but could have been another cross. Which leads to your next question. Okay, well, then what about the RSI that you're saying is so damn important? Once again, you've got an RSI bottom here. Now, I agree, it's not oversold. It got down to 35, which is pretty darn low and definitely bearish. Definitely a bear market. Nobody's going to argue with me there. But it's not oversold. It doesn't follow the pattern that I'm supposedly talking about. Well, again, use your imaginations, boys and girls. A little bit more liquidity combined with the natural volatility of early days Bitcoin. Maybe this could have dropped down to at least 30. You know what I'm saying? Maybe 29.99. So it's just to say, yes, this one is not a data point as far as scientists are concerned. It's something for the imagination. It could have been a third data point, though. It's pretty darn close. So I've given you the two instances where it has definitely happened before, and now let's see where we are today, gentlemen and gentle ladies. You already know where this is going. What fired off literally hours ago, I guess? Let's take a look at the MAs. Park my cursor. And if you point your attention to the top left of the screen, you'll see that have they crossed? Yes, they have. Okay, so the 20-week is at 35,794, and the 100-week is at 35,842. The green is at present below the red. 50 is currently below the 100. So, first indicator. And if you point your eyes to the bottom of the screen, you already know where I'm going with this. RSI, 29.8. So, it's just to say, I'm going to be watching. And I don't think it hurts anybody to also watch this. Yes, patterns are silly. Triangles are silly. Moving averages are silly. Lines are silly. Blah, 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 blah. But you know what? When they all happen, when more than one happen at a time, when they coincide, I think it's worth looking at, honestly. I don't think it hurts because, look, we're already hurting. we're down, 70% or something on the year. So, yeah. So that's kind of what I've been working on the crypto chart, and then I'll talk next about what I think equity markets will do. First, I need a sip of my apple juice. Since this is live, I believe this is only a 12-year apple juice. I cheaped out on you guys tonight because I don't know how this is going to go. Okay. Let's see if anybody's in chat. I'm not good at... Nope. Okay, nobody's chatting. Well, that hurts my feelings. Just kidding. So that's the indicator on the weekly, which is where I'm watching it. So this next chart is going to be the monthly. Again, I'm staying on Bitcoin, which has everybody here angry, I'm sure. Why am I on Bitcoin? Look, as I've said in my post before, I have not owned Bitcoin in a very, very long time. I'm just going to leave it at that. I had Bitcoin very early, and I have not owned Bitcoin in a very long time. When I say that I'm interested in moves, based on price action or charts, it means I'm doing something with Ethereum or an alt. Although I haven't had an alt in over a year now too. So over a year. So believe me when I say I love Ethereum. I'm 100% Ethereum, and any moves I make happen on Ethereum. All right, so we're on the monthly chart. I'm not tracking any particular indicators here. There may be one, but the main thing here is just the trend. As you can see, we're still in the index so that we can look far back, and Bitcoin has just crossed the 50-month. I don't have to make a big show of this. It doesn't stay below the 50-month very long, guys. You can feel that with your gut, let alone seeing it on the actual chart. Look at this. I mean, yeah, it kind of dipped below here in the 2018 bear market after setting a bottom. And then, came up very, very rapidly. If you bought at any point, at any very short point during Bitcoin's trek below the 50-month, you were very happy very soon after. Obviously, it had a wick down after the COVID plunge, but more or less, you were. In fact, the COVID plunge didn't touch the bottom of that 50-month voyage. So, not financial advice, but no matter what happens, it looks like things are happening. ETH's down. Our beloved ETH is down to about 1320 as we speak. Bitcoin's at 25 too. Things are currently happening. That said, I think, not financial advice. I think buying here is still going to be a great decision down the road, and maybe not even too far down the road. And DCAing down from here is going to be an even more excellent decision if it happens. This is, as they say, uh, this is the time where you mint money. It's in the toughest times. Blood in the streets. Bear markets are where millionaires are made, et cetera, et cetera. I will asterisk that statement as well because things could be different. This time could be different. Trademark TM, all rights reserved, and we'll talk about that when we look at the equities market. But as of right now, it seems to be a decent area to feel good about your purchases. So that's the 50-month. And and the last thing I wanted to say while we're on this chart is, even though based on that weekly indicator that we may or may not be tracking, it can still drop from here, even when that indicator fires off. And I'm not even looking at the COVID plunge. Let's look at just when Bitcoin was tooling around the 50-month here. I mean, I think I measured this earlier. From the 50-month, it still dropped like 25% at one point. Maybe not that much. 22%. Dropped like 22%, 22%, something like that, from the 50-month. And right now I gotta zoom in for this one. Let's see where we actually are. That was terrible. That was a terrible click. Oh, this is not working. Well, we'll just have to map this out. So the 50-month is currently at 26,000, and we're down $700, $800 from there. So nowhere near 22%. You know what I'm saying? Back in at the 2014 bear bottom, where did it drop to? It saw some lows. Oh man, this clicking is too far off. I've got the pixels set too far off. In any case, it dropped from, here was the 50-month at 186, 187. We'll just say 200 just to make this fairly easy. It dropped from 200 to about 170. I see 165. That's 20% again. So that's just to say that even though we're tracking this indicator, it can still fall. Can I please get this thing to click? Yeah, that looks like it worked. Okay, so 20%. If it were to drop like that again, it's $20,000, 20K. Very popular on crypto Twitter. It doesn't mean it's going to go down there, but it can. So be careful, even with all these fun little indicators that we're firing off. All right. That's really all I need to say about crypto right now. Sorry. No, the ratio, someone thanked me for the stream. Oh, thanks guys. I appreciate it. Yeah, hopefully everything's still centered, and I'm trying to do my best here. I'm getting all flustered from this attention. Okay, that is not what the last thing I want to talk about. I of course want to talk about the ratio, because this is ETH finance. I'm all in on ETH, and even though we're tied to Bitcoin, things can still happen, and generally they're not great things. So let's take a look at the ratio. When Bitcoin is doing its thing, especially during bear market bottoms, ETH, it doesn't do great in the lead up. Let's take a look at 2018. Here on the chart, it's jumping around. Am I still on auto? Oh, dang it! It's that scam wick from Coinbase screwing up my chart. That's fine. This is good enough. Okay, so let's just keep this. Okay, in the middle of the screen. Here is the bear market bottom. And you can see as Bitcoin was dawdling around, this is when it was starting to go below the 50-month. I believe it was in September. And the ratio drops. So even though Bitcoin may or may not hit a bottom or sort of flatten out, the ratio may not, just due to, again, not smart people like us, but people who only have their eyes on numbers, arbitrage bots, trading bots. They will perceive it as weakness, because even though Ethereum is not an alt, and I will always say that, it still trades as though it is not Grandpa Bitcoin. So do be aware that there is some weakness to be found. More importantly, I want to talk about some levels with the ratio. Recently we broke through the the 100 week, which was nasty. 0.58, 0.59, really 0.6, sorry, was a big level. And so now we're below it, and you're probably wondering like, what's the next level? Here we often talk about, or sorry, I often talk about volume shelves. So I put the volume bar back on. I don't know if this will show exactly what I want to show. Um, but mostly there's a lot of air, okay? And I don't want to frighten people. There's a lot of air though between here and the next volume shelf. Um, you have to kind of squint to see it because times were different back in 2017, 2018. Um, let's go to. I don't think the weekly is showing. You know what? This is good enough. I can't complain. Otherwise, it's going to seem like I'm fudging numbers to fit a theory. So I'm just going to go off what is physically on the charts. Yeah, point oh five. It's the very start of a zone. Um, but it's just that it's a zone, and really a lot of the strength comes in over here. You can see some tests around that point oh 0.04 to maybe point. I'll give you like 0.045, which is when I would consider the inflection point was. You can see if you follow my cursor. I think I can I put a line? Ew, no, I cannot put a line. Undo that. Give me a horizontal line here. Bam! Oh gosh, that was terrible. Anyway, you can see this is kind of an inflection point. It's really rough here, guys, I know. But just to show, I do think this is a much stronger area. You can see resistance, support, support, then resistance. Broke through resistance here in December. Support, then resistance. Like, I do think this bar is a little closer, and we're right at it. So yes, this is a zone where we can bounce and bounce for good. But you always have to look at the underside of these zones where some of the volume action was taking place. Here you can see, look at these volume bars, and those were happening in the realm of, again, 0.04. I don't think it's going down to 0.03, but where these zones meet up, where this support was, it's a lot in the 0.04 zone. So it's just to say we can absolutely bounce from here. There is undeniable support here at 0.05, but the zone, I would wager it can touch lower. It can go certain. I think 0.45 is possible, and I think 0.4 would be kind of a last ditch zone of like, there's no way it goes below this. At least that's the feeling I would get, because you've got a lot of resistance there, both in January 2019, these tops. You had it again in 2020, and we toyed around with it in the early 2021 phase as well. So this 0.4, zone, which is a sort of a subzone of what I just talked about, 0.05 down to 0.04. Keep in mind, this may not be the end, and even though we could be in a bottoming phase, the ratio may still go down a little bit more, not due to anything happening on the protocol, maybe not even due to the merge. I think the merge would be great bouncing off this point, but just based on people outside of our community who don't understand it and are just purely looking at numbers and strength. So do be aware that can go down. Okay. On to equities. I'm taking a long time here. I didn't mean for this to be so long. That's what happens when K-Brot's got his apple juice. All right. Here we go. This is the SPY, and I think okay, I'm gonna move off this chart because it probably looks fucking crazy. But I do want to say, folks who are a little scared by the current price action, like these lines. Look, I didn't invent anything. I didn't perform any magic. I drew these lines months ago. Is there a way on here to like show when you drew something so that I'm not just like lying to everybody? I don't know if there's like a history button. I have no idea. Somebody can tell me later, or if somebody in chat has figured it out. This is not. Sorry, I'm looking at chat. This is not financial advice. Anyway, look, these lines have been up for months now. Somebody will tell me how I can prove that at some point. I'm not tooting my own horn. I'm saying that this stuff was expected. All this stuff is built into the charts. All these levels coincided with very obvious things, just support and resistance, basic stuff. And so the same goes, for both equity markets and crypto markets. When we talk about levels, I'm generally not pulling it out of my ass. There's at least some vague sense of like where these things are coming from. Look at, oh my God, that bounced right off that line. That's spooky, especially since I guessed. Let's go to a cleaner chart. Let's go to the SPX, because I want to move this section a little bit faster. But I do want to talk about some hope. And I don't. Do I want to do it on the weekly? Well, let's quickly let's get the bad news out of the way first. Bad news. Bad news is this is an evening star pattern. It's actually a gorgeous evening star. We've had some ugly patterns show up before. This one was uh, and by the way, since I'm skipping really fast, evening star is when you get, yeah, big green candle, then a topping candle, and then a red candle, a long red candle that more or less matches the length of the prior green candle, and then you get a confirmation after it. In this case, it was big green topping candle, which I warned everybody about in early April. Started the evening star pattern and got a confirmation. It was a kind of an ugly one, but look, it played out. And I'm not saying that like with a sigh of relief, but just to be careful, these things are strengthening. You know, the market is following them. So, what do we see here from May to June? That's an even cleaner candle. You got big green, a topping candle, not as much of a shooting star as March 28th, but certainly a top. I don't think anybody's going to argue that. And we've got our red bar down. But hey, look, two things can happen here. I'm going to get my line out. It's why I said this week, if anything, is going to give us an answer, because we're going to get a confirmation here that is going to send us to it's going to send us to an interesting level either way. So what was I just talking about? The bearish version of this is, of course, we go down more, and that's okay, sure. Great. Obviously, if we confirm down, it could get ugly. I'm going to go back to the really busy chart for a second to show you a line I drew. There are some levels coming up that are, pivotal. 380, which is, I say I don't call bottoms. I did call a bottom of 3,800 on the SPX, I think back in like February. I had it pulled up earlier. Oh yeah, here it is. There we are. Yeah, I did say 3,800 somewhere on here. Oh yeah, there it is. See, I'm not a complete liar. That was me and Oblomov having a talk. So that's why 3,800 was there. And we smacked, look at that low, 380.54. But the next line down is a lot scarier. And I have it in green because I'm an ironic bastard. The green line I have is at 365, which translates to roughly, 3650, 3700 on the full fat SPX, which is somewhere around here, well above where I just drew my confirmation line. And I think this is a very important spot, because below this it's a breach point for them. It turns into an inflection point. If we were to somehow start closing below this line on a weekly and then of course a monthly basis, you start to flip the market. You start to get below this inflection point which was the end of 2020, the start of like the hyper pump of equities. And when inflection lines like that break, which was here, where's the inflection point here? It would have matched the top of that hill. So right here, Jesus, no, here, roughly. That's really rough. But in any case, you can see what happens when the market closed in January 2008 below that sort of inflection point that was created by the prior top, the dot-com boom. It just weakens, and it gets weaker and weaker, and the bottom, nobody can call that bottom. It just stops at some point, usually when a large-scale global action happens. In this case, it was the bailout, federal bailout for banks. So, in my opinion, this is somewhat of an inflection point. It's pretty spooky, and yeah, if we were to get below that, it changes things. And some of the next things I'm going to say may not play out. But we're not there yet, and so I do want to talk about what is currently more likely to happen, in my opinion. And that's pretty exciting, and I'll show you why. Let's say this next week. Let's talk about the really easy one. The easy one is that this just double bottoms. What a beautiful W that would form. Obviously, it's not going to be this easy. It's going to go up and down on the way, but like, look, guys, what if this double bottoms at 380? 390 even. If we go straight up, let's say, we get some volatility going to the Fed, going into expiry, and then once the money managers have moved all their money around on Friday, they allow the markets to go back up, and it just rockets. Boom, you've got a double bottom. And elsewhere on my discussion, on the daily discussion posts that I've written up, I don't think that we've seen the top of this market cycle, and I do mean that sincerely. If this were to play out in some way, certainly a double bottom into a higher high back above, 415, 4150. I think we see a 5,000, 5,000 plus SPX this year. Yeah. There's just no reason why they wouldn't give it one last hurrah. And I say that with a hint of hatred in my voice because they'd be doing it to suck liquidity out of the common man's hands. If this goes up to, up here and sets a higher high and everybody's super duper happy heading into like Q1 2023, then the drop will happen. Then the plunge will happen. They will take all of your money, all of our money, with like a 20 to 30% drop, because at that point we're going to be in recession territory. I can talk about that in a bit, but I think I've written about it before, the yield curve inverting. We already had the inversion at the start of, I think it was April, or was it start of May? Start of April. Typically, recessions follow yield curve inversions. I believe the average is 12 to 18 months. They can take as long as 2 to 3 years. They can take as short as 6 months, but it has almost always led to a recession. Typically, again, 1 to 1.5 years after the inversion. So that's just to say, if this fantastical top that I'm talking about happens, where we get the S&P to 5,000, maybe 5,200, Bitcoin and ETH catch a bid and they go up to, I would hope 100K and somewhere in the realm of 10K to, I think ETH would get to somewhere like a 12 to 14K in that scenario, just based on like ratio strength, merge, triple halvening, that sort of thing. But I do think that could happen if in fact this market turns around here or basically end of next week. So this is the sort of fairy tale version, a double bottom. There's a lot of negativity in the market right now, but it could happen. The more likely thing is going to be a divergence saving us. So the bear market started with a divergence. Started here, up. RSI from that same point. Down. Oh no, lower high on the RSI. It was the most obvious divergence, and look, I didn't catch it, or at least I wasn't positioned for it necessarily, so I'm not any better than anybody else. Just saying it was a super obvious divergence, and people should have been getting out, and we'll certainly be tracking that next time. This was, the top of the market. Big old divergence on the weekly. So if we started this whole mess with a divergence, why not end it with one? Already you can kind of see maybe where I'm going with this. Take a look at take a look where the RSI is currently. You've got the May 16th plunge, week of May 16th plunge for the S&P. Got down to that 3,800 level, and the RSI was right on the border of oversold. The S&P, big old index, does not like being oversold. It only typically happens when it's in a true bear market, which it has not entered yet. Right now, it's at about 35.6. Can you imagine what if we get another down week, maybe a spike down? I'm not doing this correctly. Little spike down. It would set a lower low to scare everybody. Let's say 375. Let's go with 375, 3750 in the case of the full fat S&P. You get that, but then this thing, because it took a lot of energy out of the bears, maybe this RSI just doesn't hit that 30.2. Maybe it comes, was it at 35.6? Let's say you get a little bit of a divergence and it comes down to like 31, 32. Start to get this beautiful divergence. Lower low price, higher low RSI. That's a bullish divergence, folks. And it's there. It's there for the taking. If bulls want it, if the money managers and trillionaires of the market want to do it, man, it's really juicy. And that's what I'm hoping to see. It's what every bull should be hoping to see right now. I think a divergence is the easiest way out of this. It started with one. Why not end with one? Again, the double bottom straight up is a possibility, the W, but let's be real, folks. There's a lot of negativity. So look for that divergence. Look for that scare. the lower low on the price, but the higher low on the RSI. I think that could happen. And to prove my point further, um, you can see now we're going to go over to the US dollar index, the DXY, and same thing's happening in reverse. And so based on the chart I just showed you, this should have bulls fairly excited. Here you've got okay. So right now we've got the dollar already toying with the the high from May 9th, week of May 9th, which was, what did it close at? 104.46. And oh, look where we're at now, 104.46 exactly. Oh man. So imagine the dollar just creeps up a tiny little bit, starts to scare people. Maybe it even spikes above like this level I drew. This was 105.10, which I believe is like some kind of, that's a major trend line if I remember correctly. Oh no, it's just the random flag I drew. But I did nail it. Okay, I drew that flag and this hit it. So I'm not crazy. Anyway, imagine this thing drifts, and we set a new high on the dollar. But look at this RSI. The dollar on the week of May 9th was way up at 80, basically 81. Okay. And right now it's at 70.5. So imagine that lower high on the RSI. You get that divergence. I draw a line. Yes, I can. Get that divergence. Maybe the dollar goes up to 75 or something like that. Into overbought territory, but not crazy. And you get this divergence. Again, that's a bearish divergence, but again, it's bearish on the dollar, which means bullish for equities. I'm telling you guys, there's no reason this has to happen, but it can. The charts are starting to print it, and it's an exciting thing to look for. Okay, so now that's pretty much the end of my mental script. I'm basically just looking through like the things I track on TradingView to see if there's anything else I wanted to discuss. There's futures, which futures are bullshit. Don't worry about it. Wait for real money markets. Obviously, Bitcoin Grandpa loves to trade on futures news, which is what's happening currently as we speak. But I'm not gonna go into that because my liquid courage is running out here. All right, let's quickly do VIX volatility. Did I spy? Was there any kind of divergence here? I don't know if I pulled one out. This is a, nope, higher low on the RSI, higher low. Okay, so let's just say volatility is still here. Although, if you look, you've got March 7th, volatility opened way up at 35, 36. And in this latest volatility spike, it only got up to 33.4. So, hey, that's a lower high. Of course, it would have to get turned around and set a lower low to confirm that. It would have to go back down. Eesh, it would have to work its way back down to look about 19.5. So it's got a ways to go to confirm that lower high. But there are milestones along the way. The inflection point here is going to be, I mean, look at this. Look at 24. Whew. I often in my posts I always talk about 20. Back in the days of yore when 20 was a scary number. Obviously, the VIX hasn't been below 20 in a very long time. But prior to that, I think this 24 region, I draw a little thing here. How do I? There's nothing like super solid here. I'm just kind of showing you an area. You can see, look at this support, bounced here, or open there. They wanted to get above that line. You can see there's some, confluence around this line. It's nothing crazy. 20 is still the big one. Obviously, it has a long way to go. 20 is like a historical inflection point. But bull markets happen when it's below 20. It has a long way to go. But that's the VIX. Options do expire this week for the VIX, as I said earlier. So there's going to be action on the VIX. That is, yes, we can even look at the VVIX, which is the volatility of the VIX index. It's currently down. So and it looks like momentum has shifted on the Stochastic oscillator and RSI is turned up. So basically, there could be volatility on the volatility index this week, meaning the VIX is likely to move, and it could go straight back down if market makers like what the Fed says, or if they move their money around correctly on Friday. So the VIX could drop. We're going to see volatility on the VIX itself. What else? Last few couple of things. Here's the 10/2 US yield. So this is where I get where everybody gets the word yield curve inversion. So again, this is U.S. 10-year bond yields over U.S. 2-year bond yields. When the 2-year spikes, that is, people don't want to be, they don't have a lot of confidence in the market. This happens, and the bond yields invert, and suddenly it becomes very, very profitable to get out of the market. And that usually precedes a recession. But it remains to be seen if we'll actually hit one. We did have a yield curve inversion here, end of March, start of April, where it dropped below. Again, it dropped below zero, meaning the 2-year beat out the 10-year. Because this is 10 minus 2, if it is negative on a negative chart, it means positive. The 2-year went positive. And there's not much to make of this. Gap trading doesn't super affect this because this chart is a derivative of maybe a third derivative. So I'm not going to mention. Yes, there's a gap down. Okay, I'm not an idiot, but I don't know enough about gap trading derivative charts to talk about it, so I'm not going to. It's dropping again. It's going to bounce. It has the potential to invert again and again. You can see here prior to COVID, it was prior to the plunge. It's kind of dancing around, but that's a pretty special moment. I think more aptly is that something like this can happen, leading up into big recessions. This is, of course, before the housing crash. This started to take place in January 06 and went through May 07. So it can go up and down. We're not seeing that yet. So, there's nothing to be afraid of. This could go straight back up, meaning that people regain confidence in the U.S. market, 10 years down the road, but something to watch for. Lastly, this is something that I wanted to do posts on this for a while. I'm just quickly checking chat. Rinse. Oh, thank you. Yeah. Thanks, man. I do appreciate it. Yeah. Last thing is, I have been reading the daily discussion, on my time away and seeing like how people respond to certain market movements. And the one thing I just want to leave everybody with is you got to follow the big money. On these days, these green days in the SPY, in the S&P, and typically crypto was following, and everybody was getting really excited. Always look at what the actual market makers are doing. And what I mean by that is you want to look at where the money really is. So here's the actual trend. This is the HYG, which is a fund that tracks high yield, as it says, high yield corporate bonds. I mean, the bond market, as I've said repeatedly, biggest, fastest market on earth. When you hear bonds, you don't think fast, do you? You think slow, safe investments. But in terms of money movement, there's nowhere else that capital moves so quickly and so violently. And it's where all the money really is. I mean, the bond market, it dwarfs everything else on the planet by trillions of dollars. So you want to see what the bond market is doing to make sure that the move on the indices in equities and in crypto and other assets, is confirmed. That's what I like to do. So, on this green move up in the SPX, was it 2 weeks ago? The bond market was following for the first 3 days at least. May 31st, which I guess was on Monday, what happened? Oh, look at that. Bonds were a little uncertain. And the trend started to shift the very next day, June 1st. And I believe there was a drop or something like that on June 1st. Yeah, S&P, not a titanic drop, but certainly a drop. Anyway, it's just to say, follow the money and make sure that the move is being confirmed. And because it can give you a leg up. And the bond market has been down, down, down since. And what has the S&P been doing? Down, down, down. Another thing you can look at, which I think I've linked before, is the Home Builders Index. Not quite, obviously not as much money, and not quite as much influence, maybe, as HYG, corporate bonds. But it can help in these situations. And you can see it actually did play out similar to what I just described. Those 3 days of pump where they were trying to get liquidity back in the market just to tank it all again. But what happened on May 31st? Housing, HDX, a little bit uncertain, just like bonds. But boy, the S&P it didn't even print a cloud candle. It actually printed a fairly bullish down day. Whereas again, corporate bonds closed under, and housing printed a doji. So not again, like I said, not as powerful as bonds. Doesn't completely confirm what my thesis, but in general, housing can help out as well. Oh, and last one. There's another. Oh, gosh, what is that one? It's IQ. Oh, geez. Is it IYQ? Nope. There's another one I'm missing. I'll have that for next time. There's one more. There's one more big market maker fund that you can follow. I will. I've forgotten it, so I'm embarrassed. Okay, that should do it for this first stream. Let me see. Anybody have questions? Nope. You guys are super cool. Thank you for checking out my stream. I don't love my voice on microphone, so this is very nerve-wracking to do, but there's a lot going on, and I think there's some really interesting things to look at. Not interesting in that this is a good time in the market. I would never say that. But things that either could help with your next moves, or at least just give you something to follow along with, and maybe just give you a hint. And so that kind of leads me into the final thing. Why I didn't want to talk about the title to start the video, because people hate when people wax poetic at the start of YouTube videos. I've always wanted to call my write-ups, and I guess my subsequent stream, a 51% attack, because it's a double entendre. 51% attack, for those who don't know, does describe how, is it a Byzantine attack? Or in any case, look, if somebody were to get 51% of a given blockchain, could be Bitcoin or Ethereum or whatever, if you get 51% of it, you can begin to rewrite it. You can change the data, you can fork it, and it starts to become the dominant chain that everything adheres to. So 51% attack is bad in that way. But I wanted to make it a good thing, because I've said this a couple times. I believe, crypto equities, all this stuff is more or less a casino. None of us have the power, influence, or capital to fight against the market makers, for example, that control high yield bonds. But, casinos profit because the house always wins. No matter what, the house wins at least 51% of the time. So what if, when we, none of these things on their own, lines, triangles, moving averages, oscillators, strength indicators, none of them on their own mean anything. But taken together, when you combine them all and start to look for patterns and trends, if it can give us just 1% leg up to get us from that 50% to 51%, I mean, you'll win overall. Could take a while, but you're going to win. You're going to be a victor. And so, 51% attack. It's I want to turn it into an optimistic phrase. I don't know if that made any sense, but yeah, 51% attack. Okay, I'm gonna stop the stream now, but please comment. I'm not doing comment, subscribe. I'm not doing that. But on Reddit where I posted, please let me know what you want to see changed, what you want to see next time. If I had any audio or video issues, let me know, and hopefully I will do this again. So thank you guys for joining. I'm Kbrot, and yeah, this was 51% attack.